Greetings everyone, and thanks for watching this video on money management. Since this is a recording of a recording, the audio is a bit compromised. However, I think it's more important that the info be shared than be shelved due to being slightly off the mark in the quality department. Thanks again, and I hope you find it beneficial to your understanding of trading. And I'm here today to share a little bit with you about how I use money management principles in my trading. And the first thing that I do before I ever enter a trade is develop a money management mindset. And that is where I focus in on any trade prior to my entering it. How much can I potentially lose on that trade if my stop gets hit? One of the main differences between professional traders and amateur traders is just that. Professional traders will focus in on how much can I potentially lose on the trade, where amateur traders focus in on how much they can potentially gain on a trade. And it might seem like a subtle difference, but if you're paying attention to how much you could potentially lose on the trade, you're much less likely to find yourself entering a trade where the losses that you could incur are much greater than they should be relative to the size of your account. After I'm developing that money management mindset and thinking in that particular manner, the next thing I do is get into what I call pre-trade preparation. And there's three things that I do there. The first one is what I call the 5% rule. And whatever account I'm trading, I take a look and see the size of that particular account. And then I figure out what 5% of the account size is. And once I arrive at that number, that's now my line in the sand. I'm not going to risk more than that on any particular trade. So the 5% rule. The next thing I do is determine where I'm going to place my stop and limit on a trade relative to my entry. Let me show you this on the board a little bit. I've drawn this black line here that represents price action. And we can see that price action has been moving nicely up to the upside here, stair-stepping up, making higher highs and higher lows, the definition of an uptrend. And what I want to do here is price action made its highest high right there. And then it kind of consolidated right in here. So my next entry is going to be once price action takes out the old high and starts to move to the upside. So I know where I'm going to enter the trade. As far as where my stop goes, I'm going to put it right below where this pair has consolidated for a period of time. I want to put that stop below that level where price is least likely to trade. And if it does trade down that level and starts to go below that stop, that's the point at which I want out of the trade. So now I take a look at, here's where I'm entering, here's where my stop is going to be placed. What is the difference in pips between these two levels here? And let's say it's 50 pips for the sake of this example. Now, if 50 pips exceeds my 5% rule, I know I'm not going to take the trade because I've got too much of my account at risk. Next, I figure out where I'm going to place the limit on this particular trade. And I want to execute and put in place what I call a 1-to-2 risk-reward ratio. So if I'm risking 50 pips here, I'm going to double that, so 100 pips. And my limit is going to be 100 pips above my entry. Not quite drawn to scale, but you get the idea. So I'm risking 50 down here to gain 100 on the upside. That's how I set up my risk-reward ratio. So now that I've gone through my pre-trade prep, I'm all set. I can enter the trade. And I will enter the trade, like I said, when price action takes out that high that was right here. So as soon as it trades up above that level, then I'm into the trade. And then I shift into what I call my monitoring mode. I'm going to be monitoring this active trade. And I want to make a little distinction here. Monitoring a trade is checking back periodically to see how the trade's going. A lot of people get into the habit of babysitting their trades. Babysitting the trade is looking back every 15 seconds, every minute, every 2 minutes to see how things are going. Don't get into that habit. I can tell you from personal experience, I've talked to other traders on this subject as well, and what I have found is the more that I babysit a trade, the less I'm likely to gain on the trade and the more I'm likely to lose. In other words, keep your hands off of the trade. Don't mess with it after you've already entered it. Because the problem becomes, once you're into the trade, emotions play a big part of that. Oh, it's going up faster than I thought. Oh, it's dropping faster than I thought it was going to. Where when you're doing your pre-trade analysis, your pre-trade prep, you don't have any emotions because you're not in the trade. Stick with that analysis. Now, what I want to do when I'm monitoring the trade, checking back periodically to see how it's going, I want to be looking for one thing primarily, and that's when that trade progresses to the halfway point between my entry and my limit. That's what I'm monitoring the trade for. And I can monitor the trade either visually, if I've got a couple monitors up, or even if I just have one monitor that I might be looking at and I'm doing something else on the computer, I can check back and look at that chart periodically, look at the trading station, see how the trade is progressing, knowing in my mind what the number is at that halfway point, because that's what I'm looking for. Another thing that I can do is I can set price alarms. So if I'm not in front of my computer, I can get a price alarm that will go off and alert me to the fact that, okay, it's now at that halfway point, what do you want to do? The way I set price alarms is with market scope charts. All you have to do on market scope charts is the chart that you have up to monitor the trade that you have open, just right click any place on that chart, a window will come up, and one of the options that you can choose is going to be price alerts. Click on price alerts, and then just follow the prompts that are in there, put in the price at which you want to be notified, and then click OK. And you can set it so it can notify you either audibly, so you can hear it, or visually, or both. So it's a great way to go. Now, what do I hit, price alarms hit? There's a couple options that I have. One is I can move my stops to break even at that point, which is what I will most likely do. Move the stops to break even, which means I've taken all risk off the table once I've done that. Because if the pair retraces, once my stops are at break even, I don't gain anything on the trade, but I don't lose anything either. That's a pretty good situation to be in. The other thing that I want to take a look at is, do I want to close out any positions at that halfway point? Let's say I'm trading 6 lots on the trade. And once it gets to that halfway point, I might choose to close out 2 of those lots, or I might choose to close out half of them, 3 of those lots, thereby locking in that profit, moving my stop to break even on the rest, at which point, again, I'm trading risk-free. So that's what I'm looking for when that price alarm hits. What kind of adjustments do I want to make at that halfway point? Now, when I talk about risk-reward ratio, and these questions come in every once in a while, people are wondering, how do you explain that 1-to-2 risk-reward ratio? How can that work in your favor? I've diagrammed it here quickly. Let's say with 10 trades. Let's say I place 10 trades, and 5 of them are losers, 5 of them are winners. And I've had the same risk-reward ratio here as I've had there. So with my 5 losers, I lose 50 pips on each one of them. So for the 5, I'm down 250 pips. But on the winning side, the 5 winners that I've had, I've gained 100 pips. Times 5, I'm up 500 pips. So my net is a plus 250 pips. I was only correct half the time in my trading, and I showed a profit for that. That's what a good risk-reward ratio can do for you. That's one of the ways, those are several of the ways that I employ money management principles in my trading. And I hope you found it beneficial. And thanks for listening today, and good luck with your trading.